So Steve, we are in a relatively new Cambria hotel, New York City, Times Square. It's packed. And I was looking over numbers. I mean, the development pipeline was up 112% for these hotels. Why are you seeing so many, I guess, people sign up, and why are you expanding this brand?
Well, I think what's happening is people have seen the new urban product. They've seen how well it's performing. These things are ramping up rapidly into premium status. And so I think the developers have taken interest. We're actually being very aggressive in terms of the capital that we're doing to incent developers to do these. That plus the fact that they know that we literally have millions of folks in all of these markets that are looking for hotel rooms that we can't satisfy creates a very powerful combination, and it's working.
Yeah, I've noticed that you guys are moving more into the urban areas. I mean, that puts you in competition with Airbnb. How do you respond to that?
Well, we like the Airbnb model so much that we launched our own. So we're in the business, vacation rentals by choice. The key difference is we're going to do our product through vacation rental management companies to ensure that we get great service 24 hours a day. So, however, having said that, we think they've done a good job, and we want to be in that space in a big way. We think we've got a lot of advantages that I think people are going to like. And in addition to that, we're not competing with them. They're not taking inventory from us. We are in a position where, when you see where the inventory expands, it's affecting the upper upscale hotels, not where we play.
Me personally, I'm not staying in somebody's sweaty room. I mean, that's just me. Switching gears a little bit to the quarter.
Our customers don't want a couch either. So.
Fair enough. To the quarter. I mean, we talked 3-4 months ago. Things were slowing down a little bit, and then you come out, second quarter results, beating your RevPar guidance, trounced earnings estimates. The economy slowed down drastically. Basically no growth. How'd you come up with this quarter?
Well, I'll tell you two things. One is, we're having a big summer. Our folks are traveling. 72% of the folks we surveyed said they're going to travel by car, which is a big advantage to us. Airlines are full, and it's a hassle to go through the airport. And so as a result, most people are driving. That's a big advantage to us. In addition to that, we're known for the summer, right? We're known for leisure. We're known for value. And so we've got lots of people looking for our places. And in addition to that, we're actually taking share from the competition. So I think we're doing some things that the customers are noticing. We're also doing some things in the distribution environment that I think are making a big difference. We launched a brand new Choice Privileges, which has been a home run. We're literally going to sign up double the number of people we signed up last year, just crossed 27 million. And it is designed specifically for a broad array of customers, particularly younger people who want rewards faster. So when you sign up with us, you can get a Starbucks card. You can get an Uber Lyft immediately. So it's those kind of things that I think have really gotten people's notice. They're signing up in big numbers, and we're having a great summer. Our numbers are off the charts.
Where do you think the share's coming from? I mean, you mentioned taking share. Where?
I think people are noticing, particularly our biggest brand, Comfort. We've had 21 months in a row of RevPar index gains, and that's because we fixed the brand. We terminated 600 hotels. We renovated and revamped with a really updated look and feel, and the customers are reacting to it very positively.
I know you guys are primarily focused on the leisure market, but I'm sure there's some kind of business component here. And I was going through host hotels, and I would be honest with you, the results kind of freaked me out a little bit, the earnings call. What would you say to an investor who saw that earnings call and they saw the good quarter that you guys put up?
I would say two things. One is Choice is in a different position because the unmet demand we've got in urban markets. Two is business customers are moving more towards our product. They're looking for more value. They're looking for less bells and whistles, and they don't want to be trapped in a huge hotel. They want to be in a place they can get in and out of. They can get a drink. They can get a sandwich. They've got a great rooms product to stay in. It's centrally located. You can't get more main than this. And those customers are reacting. So two Tuesdays ago, the Cambria brand sold out. So we're obviously appealing to a large number of business customers on a Tuesday night, and so they're finding us. We're getting the distribution they want, and I think we're going to be a big player in that space because I think we're what the new business traveler wants.
So you're not seeing any cancellations. Hosts called out, I think, cancellations, and they actually blamed weak corporate profits.
I think so. They're in a group segment business. We are not into big groups. We do small groups. We're not seeing any tail off of that, but it's not. We're not in the major group segment, and that is a soft spot in the hotel industry today.
Interesting. Switching gears across the pond to Europe, you're making a big push. You signed a lot of deals to get into Europe. What's giving you that confidence to sign those agreements, given everything we've seen on terrorism, slow down the economy, Brexit?
Europe is forever. It's been here before. It's It's been through lots of things worse than this.
That's one way to put it.
It'll be here when you and I are gone.
Yep.
Well, maybe when I'm gone. So, but in the end, Europe is a great market for us. It's a big conversion market that plays to our strength. We're getting a fair number of new builds too. We signed a big deal in Hungary, Austria, and Germany for about 44 hotels. We just brought Ascend, the boutique collection, into the UK and France. We're expanding rapidly into Turkey. We just signed a 7-unit Ascend deal. One is going to open this year. We had 4 other hotels that we've opened. And yeah, you just could scratch your head about, really, Turkey? Turkey will survive. Turkey always does. And so that's the gateway to the Middle East. We've signed a deal in the UAE and Saudi Arabia for what will be about 9,000 rooms initially, and probably eventually more like 20, 25 hotels. But one of them will be a 5,000 room Comfort Inn at Mecca. That's a lot of waffles.
Yeah, seriously. And lastly, I sat down early week, actually Monday, with Royal Caribbean CEO. North American market, solid. Western Mediterranean market, solid. See your results, solid. Well, how do you explain the strength we're seeing right now? I mean, if somebody's out there and they see all the headlines, so things are slowing down, and here's certain pockets of the travel and leisure industry showing strength.
What is held up is leisure, because the American consumer is confident. Even with all of the doomsday election discussion, the American consumer believes in their companies and their jobs, and they're traveling. And that's what you're seeing. And we're leisure oriented, 2/3 still today, and that's why our results are so strong.
Well, thanks so much for taking the time. I appreciate it. Good luck this summer.
Great to see you always. Yep.